All right, this is a ThinkOrSwim scripting class about creating a risk management calculator. And it doesn't have to be super complicated, but I think that something that everybody can use is a little refresher course on how to manage your risk. And there's a lot of really good resources out there. And what I based my strategy on was I think it was that Day Trading for Dummies book. And what it boiled down to was never risk more than 1% of your account value on any given trade. And then there were other things too, like, never have more than, three 1% losses in any month period. But I thought that was a little strict. But I did like the 1% idea, and I took that a little bit further by saying you can segment your account into smaller pieces. So if you have $100, you could say, well, I only want to risk 50 of it, and then that would be a really great way of you know making sure that you don't lose more than you want to. If it's a dry spell and you just want to risk less or whatever. There's a couple of different ways to do that. But the thing I was having trouble with is how do you actually apply that 1% without having to do a bunch of math every single time? Because if you're in a trade and you want to say, you want an entry, somewhere in here, but then your risk is down here, so that's whatever 20 cents. So then you have to say, okay, well, with 20 cents, my risk at 1% is going to be $5. So that means that I can spend $5 on 20 cents worth of shares. So then you have to divide that. And then it just becomes kind of a pain in the ass to try and do all that math. So I decided to write a study that would fix that. So if you've been in any of the other previous classes, the easiest way to do this is just to open your studies, create a new one. So you click on the Erlenmeyer flask there. And we're just going to hit create. We're going to start a brand new study here. And then we can, I can actually, the link to the study that I created for the actual risk calculator, the fully featured one, I'll provide later. But this just opens up our new study. So let's just call it whatever we want. And it gives us its kind of default data plot, but we're not even going to be using a data plot here. What we're going to be doing is we're going to be adding a label, because we want this to be a display thing. I want to know what my current risk level is. So the way you do that is with add label. And this is a function that I've used before. It's really great for debugging or displaying stuff. It takes a couple of parameters, and if you go into the look and feel on the side here, add label is one of them, and it tells you what it needs. It needs whether it's visible or not. So this is a condition that says show this label or not. So if you were to type in no as the first argument, it wouldn't show the label. But that's not all that great. I mean, you can also type yes, which is kind of the default, always show it. But the cool thing about labels is you can make it conditional, if some certain condition exists or resolves to true, then display it. So if if stock price is above 30, then display or not. But here we do want to just say yes, because we want it to display all the time. This is risk management. You should always be having risk management. So the next piece of it is text, and the text is the label that's going to show up. So for now, we're just going to put risk amount, right? So we just want to prove that this label works, and then we'll come back to it. And then the other thing it needs is a color, this custom color, and that's going to be what the background color of the label is. So we'll just use a basic built-in color, which is color.white. So you can see that because it's not red anymore, it likes this statement. And if you'll recall from previous classes, anything that's wrong with the statement, it'll tell you by making it red. So if you delete the semicolon, it'll make it red, and then it'll tell you down here, has void return value and can't be used. Well, that's not very helpful. I mean, you just have to know that it's missing a semicolon. But if you remove one of the values or add too many, or do anything to it that's wrong, it's going to say 3 parameters expected but 4 found. So it's like, oh, I called this wrong. There's too many parameters, so I'll just take one out. Sometimes the messages are helpful, sometimes they're not. But right now we just want a basic label with a risk calculator so we can see that it works. So we hit OK, and then we hit apply. So what this should do is put the label up here, and you can see that it's put the label up with our risk amount text, and that's not super helpful yet because it's just plain text. So we want to go back in. So now you can see it's added this study to my list. Right now the study doesn't have any options. We'll add some later, but then you want to click on the little script And that'll pop up this window where it'll show us our text again. What we want is the output to be an actual risk amount. Like how much can we risk? What's our basics? So the way we do that is add some variables. We're going to use the first one is going to be net liquidity, which is we'll just hard code it to like 1,000, right? So this is $1,000 in your account, say, and we'll make it hard coded for now, but we can also fix that later and make it dynamic. But the other thing we need is a risk amount. So let's say risk percent, and we'll say our risk percent equals 1.0. And the reason that so we're just declaring variables right here, right now, and all that is it's really like just a basic way of setting some defaults so that we can at least get our code right, so we know the code works. So when we make it more complicated, it's just more iterative. So we want 1% risk for now, and $1,000 in the account for pretend. But then to make it easier, I think I want to write a little a little formula to create the percentage amount. So we're going to say risk amount equals so that's going to be the net liquidity times the risk percent, but that's going to give us 1, right? If it's 1%, then that's just going to be the net liquidity, and that's not really what we want. So what we want is the risk percent divided by 100, because that'll give us a percentage. So it's going to be 0.01 in this case, which is 1%. So one of the things we can do with this text is put in a plus sign, and that basically concatenates strings or numbers or whatever. So if it's risk amount plus test, you can see that it says risk amount test up here. So it's just adding these two strings together. But the nice thing is you can also add numbers in and other things, conditional things. So when we have the plus here, and it says invalid statement, and we know it's invalid because we just added a plus sign. But let's call it risk amount, and then when we hit apply, it should actually give us a number, right? The number is 1,000. Well, obviously we're not risking 1,000. That's not 1%. Our risk percent is incorrect here. There's other ways to do this calculation, but what I want to do is risk percent divided by 100, which will give us that 1%. So we want to multiply our net liquidity by 1%. I mean, there's other easier ways to set this up, but I like doing it this way just so that you know that you have a risk percent, that later when we make this an input, you can change that pretty easily, and you don't have to change the rest of the formulas down below. So when you hit apply, now you can see the risk amount is 10. So of this, we have a $10 risk in a $1,000 account. That's 1%. So that's great. Now we know the risk amount, which is a useful thing to have, and if you do nothing else, I think that this would be a good kind of shorthand for you to be able to say, okay, I only want to risk of my account, I only want to risk 1,000 total, and then 1% of that on any given trade. So now you have your $10, which is it's good, but it doesn't really get us into other things that I mean, you may want to make it a little easier to figure out your risk, and do other things like make it prettier. Like the risk amount right here is just it's just a 10. So what you can do is there's this other function called as dollars, which is kind of cool. It formats it as a dollar amount automatically, so it'll make it only have 2 decimal places. It'll give it a dollar sign. It automatically sets up the format of that number as a dollar amount, which is kind of cool. I mean, you don't have to do that. Obviously, if you're writing this, you know that 10 is your dollar amount, but this just makes it a little more clear. And you can add other things, like you can say, instead of risk amount, you can say, let's give it a percentage. So let's say, risk percent plus, right? So now when we have it, this is just all making it prettier. 1%, oops, that's kind of ugly. So we're just adding some string text in here. So it's taking our actual risk percent that we set up here and making it part of this dynamic thing. So the other thing we can do, and this is, again, I mean, this is kind of a basic way of just taking what you've currently got set up and running with it. This is the bare minimum for risk management, but we can do better. One of the things I like to do is make this an input instead of a definition. Definition is just, hey, here's a variable. Input is, hey, here's a variable that the user can configure in the study without having to go into the code. So if we make these both inputs, it doesn't change anything about anything else. It just allows us to, when we're in our risk calculator here, if you click on the gear, now all of a sudden these show up as options, which is great because now you can say, well, I only want to have a $50 account, or I made $200 yesterday, so I want to compound that into my risk level. And so now when you hit OK, you can see that you have to hit apply when you make changes there, but you can see that the risk level is updated to $12. So it's taking into account those variables that we created there, and letting us make it a little more dynamic. So the other cool thing that we want to do here, though, is not just have this amount, but we want to add other labels that tell us, like for various risk amounts, like 5, 10, 15 cents, like how many shares we can buy. So like do all the math for us, like why not? So I'll just copy and paste this label here because it's got all the elements that we need already. And one of the things we want to do is create risk amounts. So we can do that with a definition like def risk. Let's do a couple of them so we'll number them. Risk 01 equals 0.05, so 5 cents for the first risk amount. And it's always good practice to add the 0 to make sure that you know that it's a floating point decimal number and you don't lose that decimal when you're digging through your code. So this risk amount then we can use in here where we can say if the risk, let's see, this is going to be in shares, so we don't want it as dollars. So let's just rewrite this whole text here, where it's actually let's put the risk in as dollars. And again, capitalization doesn't matter, it's just a formatting thing. But as dollars, risk 01. So now it's going to format that as a dollar amount. And then again, this is the text part. So there's three parameters in this add label. There's whether we show it or not. There's the text that gets shown, and then there's the color of the background. So the text that gets shown, we want to make this into a concatenated string. So we want to add the risk amount. So like risk amount divided by the risk 01, right? So what this will give us is, let's just put this in parentheses so that it's set off as it's going to be expecting a number, just to make it easier for us to see. So we're going to take our risk amount, which is our actual, whatever, we've got $12 to risk. So we're taking that risk amount, and you can see that that's when you highlight it, it highlights all of that variable's instances, so you can see what you're, make sure that you're using the right one. And then we're going to divide it by the risk 01 value, the 5 cent risk. So when we hit apply here, what we should see is another thing here that's 0.05240, which, I mean, obviously you're not going to be spending 240ths of a cent, so we need to make this a rounded number. And it's kind of dumb, but the way to do this is to round the amount. But if you just round the amount, now all of a sudden it doesn't take into account all of it's still the same number, right? So what we want is to cut off anything beyond the first 2 decimal points. So the one way to do that is to just divide it by 100, so it pushes it further out, and then multiply it by 100 after it's rounded, which should give us those 2 decimal points. And actually multiply it, which is an asterisk. That's the multiplication symbol. So hopefully, that doesn't even work. Somewhere my math is very screwed up. Risk amount divided by risk 01 divided by 100 plus, I don't know, maybe I'll have to go back and figure that out later, why that's showing up incorrect still. But the point is, though, that you can add more risk amounts relatively easily now. So if you want 10 cents, then you can go, make another one 10 cents, and then call this one something different because you've already defined a risk 01, so we'll make a risk 02. So then you can take this label and copy and paste it, and then just change the variable numbers to risk 02 and risk 02. So now you've got, two of these, and you can make as many as you want. So when we apply it, you can see that that's going to be 5 cents and 10 cents. I'm really curious why this rounding didn't work, though. That's oh, it did work. What I did was I just concatenated the two numbers together. So risk 01 is 5 cents. The number of shares is 240. It's not even a decimal. It was already rounded. So we just have to add another string in between it to make it look right. So we'll go like that. That's really what we want to do. So it's always good to kind of think about what it is that you're doing, and when you're debugging it, to try to understand why it's causing that problem. So now this makes a lot more sense. At 5 cents, we can buy 240 shares at a $12 risk amount. So this is 1% of our account, $12 risk amount. And at 5 cents, it's 240, 10 cents, it's 120. I mean, you can kind of see where this is going. You just add a couple more risk levels, and you can, cover the gamut of common risk levels, and then just kind of default to one. But you can make it whatever you want. If you like 13 cents or whatever, I mean, I happen to like nice round numbers because they make more sense to me. But then we can just add another label at the end and do it as risk 03. So this is the same code, it's just adding in multiple risk levels for us. Risk 32, how about 03? So when we hit apply, now we've got our 3 risk levels here, and they're dynamic too. So the other cool thing is, as you start changing things, so let's say you want to come in here and you say, well, I made $60 today, so let's add that into our amount. So now it's 1,260, and our risk percent is 1%. Okay, so then you hit apply, and now all of a sudden, all of these values update automatically. And that's the thing we really want, because when you're trying to manage your risk, it's not only about setting realistic risk levels, it's also about compounding your gains, making sure that you're keeping up with your account. So as you make money, you want to make sure that you incorporate that capital into your working funds, and so this will do that like that, which is kind of nice. I mean, it would be cool to be able to keep that updated, and you could do that every day. You could, however you want. But the problem is, if you want to, what if you want to risk like 0.5%, and this is at 1, you go into your risk calculator here, and it doesn't give you that option. You can only change the number of percentages here in whole numbers, and when you apply it, it's like, yeah, it works. But the problem is that, what if you want like 0.5% or a tenth of a percent, which is what I'm doing. Next week I'm going to go in small and just do some kind of training. So I don't really want a big risk, but I want to train how to use this calculator. So I want to make it smaller. And the way to do that is how you set up your inputs. So if you'll recall, instead of being a definition where it's just a variable, we're actually making this an input, which lets the user pick it. And this is where this 1 comes from. But it formats this variable automatically based on what you use. So if you make this a 0.1, or if you make it a 1.0, now it knows that it's a floating point number that has 1 decimal point worth of decimal in it. So if you go into here, now all of a sudden this is in tenths of a percent, which is great. I mean, you can make it in hundredths of a percent, however you want, but I want, tenths of a percent of this, because, next week I want to go in really small. I want to go 10 times smaller than I normally would. So I don't have any anxiety about what I'm doing, like the amounts that I'm playing with. I'm only focusing on the piece that I want to train. And obviously this works a lot better if you don't have to pay commissions, because, if you do, then you have to plan your trades a lot more carefully. But if you don't have to pay commissions, this is a really great way to train. I mean, even if you're on a cash-only account, having a much smaller amount to play with means your funds will be able to settle, and you can play with whatever you want until you start running into that fund settlement amount. Keep your percentage small, and as you get better, you can change your risk percent, and move it up to a bigger size. You can change your liquidity and move that up. But this is kind of cool because it'll automatically show you, now I can buy 25 shares at 5 cents or 8 shares at 15-cent risk level. So when I go into my down here, when I'm looking at like, okay, I want to buy this dip here. This is at 13.1, and I want to actually give it a little bit of breathing room. But if it goes down below, 13, then we're going to call that busted. My thesis was that it would bounce at 13, so I just have to put it below 13, which is about a 10-cent risk. So I can look up here and say, well, that actually means I can buy 13 shares. So then when I go in to pull the trigger, I know how many shares that I can buy at that stop. So you put in your bid, and if you're using the TRG with bracket, you can enable just a piece of it and then say, well, I want this stop to be a 10-cent stop. And then when you put in the order, it automatically runs it for you in the active ladder. So you can see that 10-cent stop automatically there. So when you put in your buy order at 13 or whatever, 13.10, so now you can see I've got a buy limit. Oh, it won't let me because it's day. Oh, actually it does let me. Good. So you can see that it automatically adds in at 13. It adds in that same amount as a stop, which is pretty cool. And then you can adjust it from there, and it'll hold. So if you do need to adjust your stop, just be aware that it isn't gonna it's not gonna match this number that you had set already. So you may need to change the number of shares that you're putting in. Oh, and actually it should have been 13 shares. So I mean, that's the other thing about it, is that you can add more of them. So let's say you wanted to come in here at 5, but you want 13 shares, so you can hit 5 twice, and it's like, well, that's close enough to 13. Or you can make it actually 13, but now you have an exact number of risk, you have an exact risk level. You're never like, this is 1%. This is 1%, so you don't have to worry about it. You can trade more like a robot, take your emotions out of it. It just makes it easier for you when you're making these trades to focus on the things you need to focus on, instead of getting stressed out because your position size is too big. Because if you're stressed out, your position size is too big. So the other thing we can do with this study, though, I mean, this is great and all if you want to do something like that. But what if you want to actually use your real liquidity amount? And so that's in the final version that I've got. There's this really cool function called getNet liquidity, which is getNet LIQ, and that'll actually give you your actual account amount. And it will then, as your account changes, so instead of an input, it is it's just a function. So it's like getNet LIQ for liquidity, and this function will actually what is it like it? Oh, input, because it's not an input. You can't make it an input. This is kind of the problem. It just says invalid statement input, and you have to know why. It's because an input is a user-defined thing, but this is a dynamic function, and you can't apply a dynamic function to something that's user-defined, because it needs to know what it is that you're asking for. Like, are you asking for a number or whatever? It bases all of that on what you choose here, but this is a function, so that means it has to be a definition, and that's fine, because this is going to pull your actual liquidity amount into here, and then your risk percent is based on that. So it'll pull in your liquidity and show you the percentage, and then it'll show you like how much you can actually put in based on that liquidity, which is pretty cool. I mean, that's a neat way to set it up. So one of the things that I would like to do is within that. I mean, and you can actually go into the whole. If you want to dig into it's a lot more complicated in the final study that I'd created. There's a lot more risk amounts. For example, there's it pulls in your actual liquidity. There's an option to subtract PDT amount from it, because if you are above PDT, you don't necessarily want to risk that PDT amount at all. You want that in violet. So you can say, yeah, subtract out PDT, and then it'll just give you the amount that's above PDT, and that is what you can risk from. And this is all like, your relative, like how comfortable you are with, your own risk management. But then you can also have more risk amounts. The way I'd set it up is that if, there's like 15 different risk amounts, but if it's set to 0, then it doesn't show. So you have the option of adding more if you want to. It also lets you set an account size. So if you say, I want a hard-coded size of like 1,000, then it'll take that and override the net liquidity, so it won't actually show that piece of it in there. And actually, I can just show you what that looks like. So let's remove this one and then go get the risk calculator. So we'll add this one. So what this will do is this will take all of those basic pieces, and so this like going into here is going to be like getting the you know, this is the fancy version of that same thing. It's all the same stuff. At the end, it's, you know, it really comes down to just creating a label that shows your you know, your net liquidity, your risk percent, your risk amount. And actually, I think I'm probably going to take off the liquidity because that's been bugging me lately to know. I mean, I don't want to know. I just want to know how much, and I can figure it out in my head. But I really just want the risk amount there to be able to say to focus on what I need to focus on, which is how many shares can I buy. That's the only thing I need to worry about, is how many shares can I buy. So this takes all of that, you know, all of that sort of guesswork out of it. It just automatically lets you fix it. So when you hit OK here, it should hopefully, and then apply. So now we can see, you know, it's got all of my levels automatically here. It's telling me my current risk level is set at 1%, and that gives me $10. So that, you know, tells you how much is in the account. But I don't want that. I think I want to go with risk percent of, you know, 0.1%, just until I'm feeling comfortable. So I'll go in there and then I hit apply. So this shows me now. So it's like $1. I have $1 to play with. That's nothing. That's not even lunch money. I mean, I'm not even going to care if I lose $1. So I don't have to focus on the wins or losses. What I focus on is things like my consistency. Like how well, if I have a 15% risk, how well am I, or 15-cent risk, how well am I adhering to this, you know, 7-share limit? Like that's the thing that I want to be looking at it and focusing on, is just these levels, you know. So if it's a let's say it's a higher spread, you know, and I'm like, well, I want to you know, look at about $1. How many shares can I buy? Well, I can buy 1. If the spread is that big, if my risk off is that large, then I really don't, you know, I can't risk more than that, because otherwise I will definitely lose more than 1%. But this also lets you focus on what's really important, which is where you're risking, and looking at your trade itself and just getting all of the money out of the way and focusing on the shares. Because if you execute this correctly, then you shouldn't care about, you'll know how well the trade went without knowing how much you made, and you shouldn't even check. I mean, some people can, and I think that's awesome. If you have the, you know, if you can actually trade like a robot, then great. But I can't, you know, and when I know that I've lost, I tend to do things like revenge trade, and, you know, I still kind of know, but if I don't really know how much, then I can move on, you know. I mean, it kind of frees me from that, and I can focus on the things that matter, like, you know, am I finding good setups? Am I acting on them quickly enough? Like, how's my technique in setting trades and in setting, you know, I mean, the other thing you can do with this is set a profit target. So if you have a 10% risk, you know that you want your profit target to be 2 to 1. So you can say, well, okay, I'm not going to get out unless it gives me at least a positive 20 cents. So now all of a sudden you've got this whole piece of it that when you set it up, you can see that it's got the buy and sells are all set for you. You know, you don't have to worry about it. It's just this little link here lets you do things like, you can still move the pieces around. So if you want to change, you shouldn't, but if you wanted to change your profit target to something else, you totally could. And because this is a bracket, it's one cancels other. So these don't kick off, the stops don't kick off until this purchase is actually made. So it waits until it hits your limit here. And you can see it over here, and you can add as many as you want. You know, you can add more at different levels. If you want to scale in, this is a great way to do it, because it manages your risk on every single piece of the scale. And you can, they're independent of each other, so you can move them around. But as soon as this is purchased, then it automatically sets these up as actual stops. So if it goes down too far, then it'll stop you out below automatically, which you don't want to think about if you've got a quick moving ticker. You just set this up beforehand, and you're done. And then the quantity automatically changes too. If you have 5, 10, 15 or whatever, you can set your quantity based on, you know, getting close to what these numbers are. And I need to set this so that there's a 1, because I'm playing small sizes, and, you know, I'm going to care about this 7 rather than 5, because at these small sizes that can make a difference in this, you know, ultimate profit target size. But then it's kind of a cool way that you can just manage your risk completely. So you take all of the guesswork out of it. You know that if you hit your stops, then that's it for the trade. You're done. I mean, if it goes below this stop, don't get back in, because you know that the trade is telling you it's bad. But you also aren't risking a lot here. You can manage that risk right up front and take all of the emotion out of this dollar amount, because you don't care what the dollar amount is. You set your risk and you just look at the number of shares and focus on that. And that'll help, I think. I mean, it has helped me, and when I get into trouble, it's because I don't do things like this kind of basic risk management. And you just got to get into that habit, and how that works is by, having some sort of easy method of calculating all of this stuff out. And this is what it does. So actually, this input show lines isn't old. I don't think this does anything anymore. I used to have lines that showed up on the chart, but that just got annoying. I also had this other thing where it was like 2 times and 3 times dollar amounts, but that's just, a multiplier effect of the actual risk size, and who cares? You could just look at it and double it and whatever. I mean, you could add it back in if you wanted to. But anyway, the basic idea though is that as you add more risk levels, so here I've got up to 95, but you can see that I've got more than that. I've got up to 15 slots because it doesn't do dynamic things very well. But I've got 15 slots in here that if it's 0, it just doesn't display. So here I can make this, $2, let's say, and then when I hit apply, that $2 amount will show up. And it also shows up as 1 because it's rounding. And when you get that high up, the risk doesn't change much, but eventually that round is going to be 0, and there's going to be amounts that you're just, if you're small enough, you're just not going to be able to buy. So anyway, that's the basics of this. And again, I'll make sure that everybody has the link to this. But hopefully something like this will keep you, stress-free in your trades and let you grow your account. Because if this number is based on your actual liquidity, when I 10x my account, then this amount also automatically updates. These amounts automatically update. So you're compounding on the fly in real time, which is really what you want to do. You want to take advantage of every time you have a win. You want to compound that into your next trades. Anytime you have a big loss, you want to make sure that you are adjusting your risk automatically to cover that. So hopefully that's a good enough overview of how this thing works. And then I guess if you end up using it, let me know. I'm always curious how people end up using my stuff. So I guess that's it.